Well, the markets are really picking up pace now. So 80 points higher on the Nifty at the high point of trade. Let's see if this lasts, though, because it is going to be volatile, perhaps because of the expiry session, and the US markets are shut later today. But for now, the bulls have it. Let's shift focus to the commodity markets. Manisha is joining in. Manisha, what's the one commodity you're tracking today?
Oh, can't keep my eyes off crude oil prices the way it has been moving every day. 4% of a decline overnight, and we are now trading at a 2-month lows and not too far away from January lows as well. This is what we've done from the November highs itself. I mean, this is just 20 days of data. And while we did see a high of $91 for the Brent, $91 there, the low clearly has been at 85 is how it's trading. And we also have seen the other crude variety decline from 98.8 to 78. So it has been $12 to $14 of a decline that we have seen from the November highs itself. And the crude prices have been moving anywhere between 3 to 5% on a day-to-day basis here. Well, markets are looking at a weak global demand outlook. The economic data that has come in from various countries has been on the weaker side. That hasn't improved at all. And then the G7 price cap is something that the market was keenly watching for, where the expectation is that you could see a range of $65 to $70 a barrel. And that would be also adjusted periodically, perhaps every quarter or so. But the point being that the 65 to 70 band is much higher, because when you look at the Russian Urals to Northwest Europe, that is selling at 62 to 63. So the cap price is higher than this. Also, Russian Urals being sold to Mediterranean is at around 67 to 68. So there's not too much of a loss that Russia would eventually make. And when you look at the cost of production of the Russian crude oil, that is at $20 a barrel. So Russia is going to be in profit even with those kind of price caps there. What the markets also are looking at in the meanwhile is the December 5th. While it's not just about the price cap that will come in from the G7, but it also is the European Union, which is looking to ban Russian oil exports. So December 5th is going to be quite important. And before that, on December 4th, you have OPEC and allies meeting, deciding about the production going forward. So those 2 days and ahead of that, it's going to be a volatile crude oil prices. Markets also looking at the Chinese COVID cases rising. There's demand weakness from there. And IEA has shown a decline in crude inventories, but a big increase when you look at the gasoline and distillate stocks. So the demand in US also seems to be declining. Everywhere that you see, there is some more pressure expected in case of crude prices.
Okay, all right. Thanks a lot for that, Manisha. Well, let's focus on a couple of stocks that are moving around, and let's go across to Surbhi, who's joining in to